So good evening, guys, and welcome back to our class today. So today we're going to continue. You know, the last class we had, I introduced engagement so that you can properly understand demand and supply zones, right? So now I'm going to now show you guys chart examples of these validations of demand and supply zones. If you look at what I did there, I wrote out the validations. Here you can see that the first one says that it must be what in line with the trend, which I explained that if you were in our class on market structure that we had like an hour, 2 hours ago today, you understand when I kept on emphasizing that when the market is buying, you saw demand zones being mitigated. When the market is selling, supply zones being created and mitigated, right? So which means that if you come into the market or you come on your charts and you see a demand zone that you want to buy from, the first thing that you want to make sure is that what the market is what buying. You know, that price action is in an uptrend before you pick what that demand zone. Or the price action is what in a downtrend before you pick what that supply zone. And I also emphasize that what it must break structure. If you look at what happened on this is EURGP, right? So this same pair, you see, okay, it's this same pair. What happened like days ago, right? This is the demand zone that price is currently buying from. This is the demand zone that price is currently buying from on this AUR GBP. Look at what I'm showing. This is where price is currently reacting from. Okay, so this is an example of a valid demand zone. Why is this a valid demand zone? Look at your validations for demand and supply zones. The first thing I said is that it must be in line with what with the trend. Now, if you look at this particular trend, we had price coming in a downtrend, creating series of what lower highs and lower lows, lower highs and lower lows. And at this point, what happened? Price went above a previous lower high. At this point, went above a previous lower high to create what a change of character at this point. Now, after that change of character was created, what happened? Price went ahead to do what? To put in a new break of structure after that change of character, which means that it has what? It has confirmed the new trend. For those of you that were on the class on market structure, I don't think this should be an issue for you again to understand. Which means that what we have not established that we are now bullish, right? And this is what this is an example of. This is a good example of what structural liquidity, which is structural engagement. I told you that as price is moving like this, the liquidity resting at these higher lows, these structural points, that is what you call what structural engagement. That they serve as engagements. Areas that hold liquidity can serve as engagement before your entry. Because people are looking to take buys at higher lows in an uptrend, it means that people have their money resting on that zones to buy or to sell. So which means that those zones are what areas that price can sweep liquidity from. So price can take out that area and will continue to the upside. That is that kind of change of character that we talked about that does not give what confirmation. Price just takes it out and still continue with moving in the same direction. It just looks like the change of pattern I was talking to you guys about that was, but it does not what change trend, right? So continuing this price action, if you look at what I was showing you guys, I talked about the first one being what in line with the trend and establishing that price change character and putting a confirmation of this change of character. It means that what we are bullish. So it is very okay to do what to look out for buys or to try to map out what demand zones in this type of market. Why we are what bullish. Now, the second validation that we have here is a break of structure. Whatever zone that you're considering as a demand zone or as a supply zone must do what? Must put in a new what? A new break of structure. It must break structure, which means that at this point you can see that what? That this low, that's the low that is sponsoring that your demand zone. It went what? It created a high that went above the previous high. A break of structure occurred at this point. It's even, you can see that price also what created this one, this next higher high. So which means that what? That area or that level that you're looking at as your valid demand zone must what? Must put in a new break of structure. That is to say that let's assume now that this is a level that people are looking towards to buy from, a level like this now, which did not what? Which did not take out any structural high. No external break of structure occurred here, right? You can see that this side did not take out any structural high, which means that this is not what? A valid demand zone to buy from. Your valid demand zone must do what? Must take out a structural high by putting in what? A new break of structure, by putting in what? A break of structure, right? That is the second thing on our validation for what? For the supply and demand zones. The next one is the premium and discount. Now, this is one of the most important ones, which I told you that at every point you must be buying from discount and you must be selling from premium. How do you determine this your discount and your premium? You go to your Fibonacci tool. I think setting up the trading view, I dropped the settings there. This is the settings for the Fibonacci tool, right? You can change it to black, black, black. I just want to use blue since I'm using red and green already so that the color will be different. You go to your Fibonacci tool, and what do? You drag it from the higher low towards to the new higher high that was created at this point. So you're dragging from your higher low to your higher high. And then you must ensure that your demand zone is found what? In the discounts. If it was a case of a supply zone that is found what? In the premium. But since this is a demand zone that we're validating, it must be found what? In the discount. And you can see that this particular demand zone, where is it? It is actually what? In the discount. You can see this particular demand zone of consideration is what is in the discount. I think it's even the only demand zone in this discount level price. It's the only demand zone here, right? And then we go to the next validation, which is what? A valid inducement. Emphasis on valid inducement. You know that there are different types of inducements that price can create before your entry. I told you guys, I did a class on liquidity and inducement, but I talked about the structural inducements, the trade line liquidity. I talked about the double tops, triple tops, which is what classified as equal highs and equal lows. They're also what forms of liquidity. Now, just to go over this, I think I remember somebody asked me a question. The person said, what is the difference between liquidity, inducement, and mitigation? If you're on this call, right? I've said this many times, right? But I'll just repeat it again because I just remember that I think I didn't answer that question. You see, liquidity means money. Inducement means deception. Do you understand? So it's just like me keeping. I know that okay, there's a boat guy passing through this road every day. Do you understand? Which means that I mean both in the sense that if I should keep money here, I know that he would want to pick it because he has bills to pay. You understand? So which means that I would now carry what? I would not carry money and keep there because I know that he's going to want. He's going to want to take it. This is me inducing him to pick it up. Do you understand? Knowing that he's stranded, he needs money for something. Do you understand? So I'm keeping liquidity at a zone that I know that this person cannot resist. I'm inducing that person with that liquidity so that they can, do you understand? Just like this thing that people do, that if they want to catch, I think, is it goats that like corns? If they want to catch a goat, what do? They just like spray corn on the floor in a way that it will lead the goat to them. As the goat is eating, it is coming to them. This is them inducing what? The goat, deceiving what? The goat. Do you understand? Then the goat is coming foolishly. Do you get? That is how they induce you on the chart to make you think that a level is a valid level to buy from. Let's say for something just like this now. Now this particular area here now is a level of what? This particular level here is an inducement, right? This particular level is an inducement. Actually, it is an inducement. Now let's say now on the chart you can see what happened. Price comes to that zone, and what does it do? It starts buying a bit, starts reacting. There are people, trust me, even if you think you're not a move, there are people that would see this level like this now and think, oh, price swept, price did this, price did that, let's just take our buy position. And then price mitigates, they start looking for all sort of confirmation or whatever, and then they see that price is started rejecting, they start stacking up what their buys. This is price inducing them, creating levels that look real so that you want to buy from those zones. You understand? Creating levels that look real to deceive you. You understand? So this is the inducement. The inducement is the process where price creates deception levels that look real so that you will put your money. Now that money that you're putting, that money that you have used to fund your trading accounts, that you have used to set limits, is now you providing liquidity. So if price you take out that level of inducement, that is when you see that price has now swept liquidity. Meaning that price has swept the money of all the traders looking to what? Looking to buy at an inducement zone. Do you understand? That is just the relationship between inducement and liquidity. Back to what I was saying on this one. Now, if you look very clearly, what happened here? We had what? We had price. For the inducement, right? I want to mention that your inducement has to be valid as well. If you have a setup, I told you that your setup must have what? An inducement. But I think it's better put as what? Your setup must have what? A valid inducement. Your valid inducement means that it must pull back into the discount if you're buying, or pull back into the premium if you're selling. This means that whether it is structural liquidity, trend line liquidity, equal highs or equal lows, whatever form that your inducement is coming in, it must pull back into 50%, or else it is not what a valid inducement. And your level does not have what enough inducement for you to buy from, meaning that it has not met your validations for what? For a demand zone. Your inducement must pull back into the discount. In this case, now you can see what after price puts in this low, this high, this was the next higher low, this is what another higher high. This is a very good example of what structural liquidity, which is going to serve as what our inducement for this level. At the same time, it created a form of equal lows with this low here, right? It created a form of equal low with this low here, which price still came to sweep. So it was just like structural liquidity and equal low type of inducement, right? But if you look very clearly, what happened? This particular inducement, if you can see very clearly, this inducement did what? It pulled back into 50%. This is 50% from the low to the high of consideration. And what happened? You can see that our inducement pulled back into 50%. It must get into premium. I told you that premium is what? Premium is this first 50 is what your discount, sorry. The discount is this first 50. Your premium is what? This second 50. So which means that the inducement must pull back into the discount if it's a buy, and must pull back into the premium if it's a sell. In this case, it's a buy, and you can see what that the form of liquidity that you're using pulled back into 50%, which means that to validate a supply or demand zone, here you say that a zone is worthy to have you risk your money on it. Its inducement must be a valid one. How do you validate an inducement? It must pull back into 50%. It must be deceiving enough. Let people look at it and let it be an area that they would want to buy from. Trust me, people that are so used to the traditional break of structure, sweep and inducement, a lot of traders would have tried to take buys from here. I'm telling you for sure. The fact that I've not been really active on social media may make me not see a lot of setups, right? But there is somebody somewhere. There are people in so many places that try to consider this zone as buy zones and price will sweep them out. It is actually luring enough. It is deceiving enough. You understand? It's giving them the whole negative feel of what sweep, induce, and all of that, even if it did not break properly. Right? This is a very good form of inducement before your entry. When price sweeps this type of inducement, you just mitigate your entry and will start going. You can see what is happening here. After price took out that level, what did it do? After price took out the level here, you just mitigated this buy and what started buying, started going what to the upside. Smooth trade. Now the next validation on our list is what? There was what? An imbalance. Now I explained to you guys that what imbalances are what? Price magnets. You understand that in an uptrend, what happens? In the market, sorry, not really an uptrend, both uptrend and downtrend. In the market, buyers and sellers have equal rights. So which means that buyers are not stronger than sellers, neither are sellers stronger than buyers. And in situations whereby buyers keep on buying and buying and buying and buying, it's a form of inefficiency or imbalance in the market. You understand? Since the whole goal and objective of the market is to create a balance between buys and sells. When there is constant buys without selling, the market will try to rebalance this imbalance by creating what sells as well. Do you get? Like if you can see what happened in this case, this place here, we had what? A buy candle here, another buy candle here, another buy candle here, another buy candle here. You can see up to like 4 buy candles. We got a sell candle. And what happened? The market was retraces with sell candles to fill what? To fill that gap. That is what an imbalance looks like. When price was creates multiple buy candlesticks without giving sellers a chance, or multiple sell candlesticks without giving what buyers a chance. And those imbalances are what price magnets. They attract price to them because price usually would come back to fuel them. It will want to rebalance the market so that sellers don't feel cheated, or so that buyers don't feel cheated. So it will want to what? Rebalance that imbalance. So having a form of imbalance before your entry gives you a higher confidence that what the price is going to come to that entry. In an attempt to fill the imbalance, it is not going to what? Mitigate your entry. And that is why you see people add imbalance as criteria before their entries. This is because it is understandable that since imbalances are price magnets, having a price magnet before your entry means that price will be attracted to your entry. In this case now, you can see this candlestick here that was yet was confused. You can see this is what a form of imbalance before our entry. When price kept buying, that was giving sellers a chance. It created what a form of imbalance. I think up to this extent was still unfilled, which would give you what a thought process that would the price will come back to fill that imbalance. And as it's coming to fill the imbalance, it will now what mitigate your entry since it is just next to your entry. So imbalance just above your entry in a buy setup or below your entry in a sell setup adds to what? Adds to its probability. Right? And then the next one we have here is the sweep. Now, price may not always sweep liquidity, but in cases when it does, sweeps are what? They are good validations for demand and supply zones. If you look at this particular one now, there was a sweep. I told you that a sweep is when price takes out a high or a low and still continue in that direction. Like here now, you had what? You had price take out this low and still what? And still continue what? To the upside. Do you understand? So the sweeping of this particular low at this point is what? This is the sweep. Price going below a low or a high, just like this, and maintaining the direction. This is an example of what a sweep. So this particular demand zone on this chart had what a sweep of liquidity before it, right? And then the next one, what do we have here as our next validation is the respect to order flow. Now, price may not always see. There are times whereby you can have two types of price action, right? It can be something like this. It can look like this. When price is what just mitigating series of what demand zones. There are times whereby price creates what chains like this. This happens a lot on JPY pairs, like a whole lot on JPY pairs, right? I think they are one of the best pairs when it comes to continuations. And when you're using continuation based on order flow, they are so sweet to trade like that, right? So let's say something just like this, whereby price is just what mitigating the next higher low, mitigating what the next higher low. This is price respecting order flow. It is similar but different from something like this, whereby price is taking out is sweeping before what before mitigation. So you can see that as much as these two setups are similar, as much as they are similar, they are what different. This is price respecting previous demands. Previous demands creating what new demand levels, right? This is order flow. When price starts what creating chains like this, chain mitigations like this, right? Why these ones are just like sweep. You can see that price is having what to sweep the liquidity resting at this engagement level, putting a new high, and then what come back to mitigate. And that mitigation is going to cause what the sweep of this particular one here now, just like this, right? This is the demand zones that are created by sweeps, and these are the demand zones that are created by what respect to order flow. So either way, if it's a sweep, if it's what respect to order flow, both of them are what both of them are validations of demand and supply zones. Now, if you look at this particular demand zone that I mapped here, it has met all of your criteria of what validates a demand zone. You have no reason not to buy from it again. It has met your full satisfaction, right? That is how you validate whatever level you are looking to buy or to sell from as a demand or a supply zone. You have more examples here. I think I mapped out something here as well. You can see in this case now, price was what in a downtrend, creating series of what lower highs and lower lows, lower highs and lower lows. You already know that when price is creating series of what lower highs and lower lows, what comes to your mind? Downtrend. And so, since downtrend, what comes to your mind? Supply zones. You must be selling only in a downtrend market. Selling only, right? And then you go back to your validations. What's the first thing? The first one we have here is what? In line with the trend. Supply zone is in line with the trend. Yes. The next one is what? Break of structure. The that supply zone break structure. That's the next thing you ask yourself. If you look at this point here now, this is what? This is the lower high that created that supply zone. And this is what? This is the lower low of that zone, right? And you can see that at this point, it went below the previous lower low by putting in what? A break of structure at this point. Now, this is what? This is the break of structure. So, yes, it broke structure. And then you go to the next validation there. What is it? It says premium or discount. So, you're going to draw out using your Fibonacci tool or your band box setting from the high towards to the low, just like this. To make sure from the high, that's the highest point, to the low, just like this, to make sure that whatever level you're considering as your supply or demand level is in either the premium or the discount, depending on direction of the trend. Premium for supply zones, discount for what? Demand zones. And if you look at what happened here, what happened? The supply zone is what? In the premium. Remember that this is what? This is premium, and this is what? This is discount. And if you look very clearly, the what? The supply zone is in the premium of price level. This is the premium. So it has met what? It has met the third criteria of what validates what? A supply zone. And then if you look at the next one, if you look at the next one, you can see what it says, a valid inducement. I told you, how do you validate your inducement? Your inducement must pull back into the premium in the cases of supply and pull back into what? The discount in the cases of demand. This means that if you have a supply zone just like this now, and let's say price now does a pullback. Let me use your light. I think it's better. Price now does a pullback like this and gives this break of structure. This is not a valid structural inducement at all. This is not what? A valid structural inducement. Your inducement, whether structural, equal highs, equal lows, whatever type of inducement you're considering, must pull back into premium. Must pull back into premium. Emphasis on what? Must pull back into premium. You understand? And if you look at this particular case now, we had what? We had this supply zone. We had an inducement that pulled backwards into premium. You can see that is a lower high that puts in what? A new lower low. So in this case, that is what? A structural type of inducement. I told you a structural type of inducement is all the one stated by the lower highs and the lower lows, or the higher lows and the higher highs. This is what an example of a structural type of inducement. You understand that there are a lot of people that will be looking to what? Looking to sell at lower highs. A lot of people have their money resting here. Price is already inducing them, telling them that it's a good area to sell from, right? And then they would want to sell, and what happens? Price just comes and strips the money resting there, and does what? Just strips it and what? Reverses just like that, as sharp as it can. Do you understand? This is what? This is them being induced. So inducement at every point must pull back into 50%. Most of the issues that you guys have is when you mark out inducements and they're not into 50%. Price will now use the level you're considering as your buy as the inducement. And that's why you get swept and you see price still going in your direction. You can be correct about market structure and then you don't enter right. Do you understand? Or you don't exit right. There are so many things, like so many little things that can make you make mistakes when it comes to trading. It's not just about being smart here. You have to be what? You have to be also like very active. You need to be curious. You need to watch out as well, right? So like I keep on emphasizing, your engagement must what? Pull back into 50%. And you can see that this particular engagement did what? It pulled back into 50%. So what's our next validation on our list? If you go to the list with me, you would see what? An imbalance. I told you that imbalances give you a form of reassurance that price will come back to your entry because they are what? They are price magnets. And if you look in this case, you had what? You had a form of imbalance at this point. You can see this here, right? You had a form of imbalance at that point. And you can see that price came towards to fill it. And in the quest of filling it, mitigated your entry and did what? Continued selling down. And I told you that the last one is what either sweep or respect to other flow. In this case, it did not necessarily sweep any high. Instead, it was actually respecting the previous what, the previous supply zone. So this is an example of the supply zone respecting other flow, not necessarily what, not necessarily sweeping. You understand? This one mitigated this one, sold down a bit, came back, mitigated this one, and then sold down a bit. So it didn't sweep any high or low, but it was what mitigating changes, which is what order flow, respect to order flow, or sweep of liquidity. I told you that it can come in two forms: price mitigating highs, or price sweeping high, mitigating, sweep, mitigate, sweep, mitigate, sweep, mitigate. Either way, they are both what good validations. So you can see that a zone like this has met all of the criteria for what validates the demand and supply zone. You have no reason to not, you don't have any reason to not hit the sell button. You execute this type of trades with confidence because they have met with all of the criteria. And majority of the times, you notice that what they end up as good trades. You understand? So this is how you build your confidence from properly validating this analysis. The moment you forget trying to like, okay, this has met every criteria. I said that the inducement did not pull back into 50%. Let me just manage it like that, Jare. You set up and cook, you set up and the moment you start attaching all these sentiments, allowing yourself to fall off from being strict about this validation, you start accommodating rubbish. And at the end of the day, you take what? Rubbish losses, right? I think I still have more things marked out here. You can see in this case now, this is what another good example, right? This is another good example of the, this is another good example where we had price, do this, do this, do this, do this, take out this zone here, and then what happens? You have this low at this point, right? You have this low at this point towards to this high here at this point, right? So this is your area of consideration. He had the sweep, he had the imbalance. What happened again? What's your next validation? Is he in line with the trend? Of course, they did break structure. Yes, it did. Did the inducement pull back? Yes, it did. It pulled back into what 50%, right? The imbalance, everything properly met. These are the setup that you execute, and you can see that price still came back to create what another continuation. Took out this high, change of character, break of structure. Took out this one, confirmation of what? Change of character, break of structure. What happened? This is acting as what your inducement, whether equal low or structural liquidity. It's in the first 50%. If I should draw out my Fibonacci 2 now from year to year, you notice that what it actually made it into what? Into the first 50% of price level. It did. It cost the first 50% of price level, right? And then the next thing you ask yourself, um, the next thing you ask yourself now, is there a form of the engagement? Okay, the engagement is there. Is it in line with structure? Is it in line with the trend? Is there an inducement? Is there an imbalance sweep or order flow? In this case, you can see what that it's actually order flow was mitigating what the previous demand zone. In some cases, it can be what sweep. And you can see that price came to sweep the liquidity resting below those inducement levels. And what did it do? It mitigated your entry and was straight by to the top. Straight by to the top. No stress. Let me see if I still have another example left here. Okay, still another buy setup again on this same EUR GBP. In this case here now you have this. Now if you look very clearly, mapping out structure, I have what? A I have a higher low here. Let me see, I'm mapping from this point now. I have a higher low, I have a higher high. I have what? Another higher low. I have what? Another what? Higher high. I have another higher low. I have what? Another higher high. I have another higher low. I have what? Another higher high at this point. Now, if you look at this particular So if you look at this particular structure now, you'll be mapping out from here. You'll be mapping out a Fibonacci from here towards to this high, right? And if you look very closely, your valid form of inducement, which is this particular inducement here now, this low, that would have deceived a lot of people to want to take buys, right? This low, creating a form of equal low with this, would have deceived a lot of people to take buys from. It pulled back into the 50% of this price level. It is in the first 50% of that price level. You see the demand zone of consideration now. This demand zone is what? It is in the discount. He has an imbalance before it. He has a valid inducement before it. It is in line with the trend. It's both structure. You know, all of these things are the things that you must see. Emphasis on the word must. You must completely see before you consider a zone, a valid zone to buy or sell from. There are no negotiables. I'm telling you that if you can be disciplined enough to try to recognize these patterns and not just recognize them, but recognize them and trade them, right? Only when you see them, you'd notice an increase or an improvement in your trading life. Definitely, it's not even something that you would negotiate. You notice what? An improvement in your trading life. A proper inducement in line with trend, the break of structure, premium discount, value inducement, imbalance, sweep, respect to other flow. Sweep or respect to other flow, right? These are the validations for our demand and supply zones. And I told you that one of the ways you can determine what is what, this is what a recent break of structure. I told you that at every point, a recent break of structure is what? Is a form of engagement, which means that if you have a price action like this, if this recent break of structure pulls back into 50% of your previous price day, this can act as what? A valid engagement to your entry. Why? Because there are a lot of people that will be looking to buy from higher lows and uptrend, making this a level that a lot of people have their liquidity resting on, and you're anticipating that what the price sweeps and does what continue your way. And even if price doesn't, let's say something like this happens, whereby price now puts in what? Price now puts in another what? Another break on structure. Now this new break on structure that was created becomes what? Becomes your recent break on structure, and this is now what? The engagement. And that is if this particular, that's the next demand zone meets every other criteria, makes it what? It's no longer what the engagement, but now makes it a good zone to buy from. If it meets every other validation, if it does not meet every other validation, what happens? You go what? You go to the demand zone below. This is how you validate. You validate them one by one until you see the one that meets what? That meets your criteria for what a demand or a supply zone should look like, right? So I think okay, people have their hands on already. Let me see if I can take some questions. Uh, uh, David John, you can unmute yourself.
All right, good evening. Please,
Yeah,
my question is just based on the recent reconstruction and the rest, the structural liquidity you're talking about. In the case of the example you did on Euro GPP, the first example, I noticed that the area you used as recent break of structure as liquidity, I thought it already have another equal low, which validates it also. I don't know if you can go back to the chat and I can specify what I'm talking about.
let's do. Okay, I think this one, yeah.
Yeah.
Okay.
Like we already have the first change of character and the break of structure to validate it. And the area you used as structural liquidity, which was you mark as equal low there. I was thinking that that was supposed to be a valid demand zone for us since there is already a double bottom, like equal lows at the top of it.
Do you know? Okay, so this is what I'm trying to explain to you. Mute yourself, please. So my
Okay.
voice is not echo. So this is what I was trying to explain to you about investment. You see what he just said now. He said that this is a valid zone. Why? Because he had what this equal lows before it. But these are not the only things that validates a zone. Because if you look very clearly now, this particular zone, there's an imbalance resting below it. These imbalances are not to be joked with. I'm telling you, even if like I don't emphasize on it as much as I do, you would find out on the chart. Because if I don't teach you, you will learn it on the chart. You will definitely experience it. Imbalances are not meant to be joked with. They are usually what? They are price magnets. If you have a level of demand or a level of supply and you see an imbalance below it, that price is yet to properly flow, just ignore the one that you want to buy yourself from and go for what the one below. Do you understand? Because in cases like this now, you see this particular zone now that you have been looking to buy yourself from. There's a zone just laying below it now. That price is yet to mitigate. That had what an imbalance that can attract price. So which means that price is going to what, take out your zone to feel what it's supposed to feel and still continue what in that direction. If you were buying from here, were you correct market structure wise? Yes, market was what supposed to buy, but you're just buying what at the wrong zone. This is clearly what an inducement for this particular level that had what a proper what imbalance before entry. That is why you have imbalance about of what your validations. Whatever level you can see now, if you map out this thing now, if you map out your Fibonacci to this 50%, these are two demand zones now that are in the 50%. These are two demand zones that are in the 50%. And if you look at the two of them, why are you using number two? The imbalance resting below number one, right? Can cause number one to be taken or to mitigate number two. So you look at the demand zones in that discount and you try to validate them. I told you that you look at the first one, why can't this work? And then you move what to the next one. Do you understand? Okay, this can't work. You move what to the next one until you find what a valid demand zone in that discount to buy from. If not, you do it, you come back again, right? So who's the next? Big John, good evening. You gotta unmute yourself.
Yeah, good evening, Star. Thank you.
Hey, please go ahead.
I have two questions. Can you just lay more emphasis on order flow? And also, can you go back to that FX example? I have something. There are other breakout structures straight up to the top. After the change of character and also the breakout structure confirming the change of character, I can see another breakout structure, another low, another breakout structure, another low before another break. Now, why didn't you use these ones on the top? Like, then comes back down before another breakup structure. Why didn't you use the inducement, the structural one inducement there? Because I can see below it, if you draw your Fibonacci from a point a little bit down, straight up, there's an inducement and there's also a fair value gap around that area. I don't know. Yeah, no, not there, not there. On top, go a little bit above. Yes, exactly there. Okay, yes, just there. No, down, downwards on that other point. The other one that took the broker structure. Yes, exactly there. Yes, exactly there. Yeah. From that point, there's the if you draw your Fibonacci tool from there down to the breakout structure, the high there, you can see the structure that came down, the inducement there. There's also a Fibonacci, there's also a fair value gap in that space there. Why did you tend to choose this? And I think price reacted to that area somehow. Thank
Not
you.
exactly. Look what he did, he just like did a slow bounce to and they start selling. You see, if you look at these particular structures, right? This was the first break of structure. This was the second break of structure. Do you understand? And then the next break of structure did not even pull back at all. It will not pull back at all, like to create before creating was the new higher high. But what I want you to take notice of is this imbalance below here. Do you understand? That is why I told you that when you're considering areas of demand and supply zones, look below or above it for possible invalidations that it can have. In this case now, you understand that imbalances are what price magnets, which means that even if a particular zone has met all of your criteria and it has a reason, price has a reason to go below it, then that is not the zone you should buy from. Or if price has a reason to go above it, that is not what a zone that you should what sell from. Do you understand? In cases like this now, this can be okay, it is respecting order flow, it has a form of inducement, imbalance, this, that. But then what is going on what below it? This is what clearly a very significant imbalance that price should feel. And you can see that price did not even bother to maybe put in another high before continuing anything or anything. It just was swept through to feel what that full balance and then continue creating what sort of equal low for the year, which is now what acting as what an inducement, this whole level being what an inducement for what this level below. So because of this imbalance, this thing happening here is what is clearly invalid. Because imbalances are what they're price magnets that give you a level of assurance that price would come to fill them. And if price comes to fill them, is it in your favor or not? If it's not, then forget about that zone and look for a level that if price should fill this imbalance, it should what mitigate and carry you what along. You understand? Okay, let me see someone else randomly. Danny, I don't know. Can you unmute yourself?
Okay. Okay, hello. Good evening. Can you hear me?
Yeah, please go ahead.
Okay, sorry. I wanted to ask, there was one other example you used, right? On that Euro GBP, you showed us the example as break of structure. I want you to really show me where the break of structure is, not this first example, the second one.
This one?
No. There was I didn't really understand the structure there. That's why. After this one, that one that you just finished now was the first one you used. There was another one you used. I think. Yeah,
was
I think. Yes, this place. Yes, this place. Yes, this place where you drew the Fibonacci. This thing. Yeah.
Okay.
So yes. So you this first demand zone, right? You said this place now is a break of structure. So I just want to understand where the break of structure occurred.
When price took out this lower high, automatically it is a break of structure. I told you that whenever price goes above protected levels, it creates a change of characters. But when price takes out like highs and lows, do you understand? It is a break of structure. So the moment
even with the week.
Yeah, okay. I actually use weak consideration as break of structure. The reason why I told you guys to stick with bodies, I told you definitely that just for your learning phase that as time goes on, you're going to learn how to integrate both with some bodies. I think there are people in the class that still know how to do with some bodies as well. But for me, if you notice, since I've been mapping out my market structure, my demands and everything, you see that I've also been using my weeks as well. You understand? So yes, I got that weeks as break of structure.
All right. Okay.
Yeah.
Thank you.
Okay, let me see if I can take one more person, but it's almost 10 p.m. So, the way you can just send the message to the group. Okay, Big JFX. I don't know. Can you unmute yourself?
Hello.
Oh, hi, good evening.
Yeah, good evening. I have 4 questions to ask, please. So for the first one, you said before a break of structure is said to be valid, does it need to have at least 4 candlesticks? But you just answered that one, which is you said you use the week, so it doesn't matter if it has candlesticks that go above it after a break of structure has happened, right?
Candlesticks that go above it.
Yes, like for a break of structure to be valid, does it need to have like candlesticks go above, probably it breaks above a week? Does it need to form like at least a number of candlesticks above for it to be valid as a break of structure, but or
It has
immediate
to be, it has
opacity?
significant. Do you understand? Now, if you look at something like this now, if I should draw something like this for you, you would know that obviously this point went above this point. I don't know if you get what I mean.
Yeah.
You would know when pullbacks are significant, you would know when breaks are significant. When price significantly goes above a previous high, that is a break of structure. Or when price significantly goes below a previous low, that is what a break of structure. It just has to be significant. Do you understand?
Yes.
All right, next question.
Okay. Is it necessary for is structural liquidity same thing as inducement? Because I hear you point out a particular place and say structural liquidity, and you also call that same point inducement.
Yes, I explained the relationship between liquidity and engagement, right? So
Yes.
a structural point can have liquidity and then it will be serving as what? As a form of inducement. So as it's acting as that inducement, people will be starting their liquidity there. Do you understand? So in a structural form of liquidity, it is an inducement. That is why I use the words interchangeably. Do you understand? I use the words, I interchange them when I'm talking about structural liquidity and engagement. I can call a point structural liquidity and say that is what it is acting as what a form of engagement, like a structural engagement. It is the same thing. Do you understand?
Yes. Okay. So my last question will be, what is a mitigated BOS? I've been asking that since. I still don't understand. When you say mitigated break of structure, I don't understand what that means.
Okay. So in an uptrend, we can have something like this. I want you to pay attention to what I'm doing. Now, this is demand zone 1. This is demand zone 2. What is the difference between these things, between this 1 and this 2? If you look at this, you see this zone, price has not approached it yet. Like price has not touched it yet. It's not like price came to it and put in the next one. You understand? Price has not tapped on it yet. So an unmitigated zone is a zone that is still untouched by price, that is still unapproached by price, that is still like price has not taken the orders resting on that zone. It means that the zone is what unmitigated. But if you look at this second one here now, you can see that what the price touched it before what putting in the new high. This is now what a mitigated area. So a zone that price has not reacted from yet, price has not touched yet. That zone is still untapped. It is still untouched. That is the what? An unmitigated zone. But the one that price has reacted from, or price has failed, or price has bought from, or price has touched, or price has tapped is what the one that has been mitigated. It means that the orders on that zone has been tampered with. The orders have been what? Mitigated. But the ones that the orders are still fresh, nothing has happened to it yet. Price has not touched it yet. Price has not approached it yet. Price has not done anything yet. The zone is still waiting for price to approach it. That is what an unmitigated zone. Are you clear? I think you're probably muted. All right. So please, the rest of you can just drop the questions on the what do they call it? The question subtopic, and I'll do it to one side. So very quick and important announcement for tomorrow. I won't be available tomorrow, and I won't be available on Monday. I have an appendectomy tomorrow. That's a surgery to remove my appendix, unfortunately, tomorrow. And I think I'll be on admission for like maybe 3-4 days, I think. But I should be able to talk and teach on Wednesday, but I don't think it should be that serious. I would leave me paralyzed for so long or something, right? So we are most likely not meeting tomorrow because the surgery is tomorrow evening, and I don't know for sure how strong I will be by Monday. So I may not also be